Okay, wow. So I'm gone for like 2 weeks and the entire market breaks down without me. So I see how it is. Anyways, I'm back here now. So hopefully we'll be on the road to recovery soon. I know you guys like great deals though, and hopefully you guys picked up some great deals for Black Friday. But did you know that the stock market was also on sale on Black Friday? Yeah, that's right. I'm sure you guys have heard by now that there's a new variant of the virus that's causing the pandemic called the Omicron variant. So because of this news, a lot of stocks has tanked, and recovery stocks, stocks that do well when the pandemic goes away, those are called recovery stocks, right? So those stocks have been beaten down dramatically, even more than the general market because of this news. Yeah, if you guys are planning on picking up some deals, why not look at some recovery stocks? Now, I don't personally own any recovery stocks at the moment because I think that the risks are still relatively high, but I have not one, not two, not three, but 5 recovery stocks here for you guys today that you might want to add to your shopping list, or at least add to your watch list. And pay attention to these, because a lot of these, most if not all of these, are nearing their 52-week lows. So yeah, anyways, I think this will be a very interesting video for a lot of people who like to deal watch and kind of try to catch the bottom. Again, not financial advice, but something to add to your watch list for sure. So without further ado, let's jump in. Okay, I'm just going to jump straight into it. The first one I have on the list is AXP, American Express. Now, American Express has gotten some legal trouble recently, which is totally independent from the whole macroeconomic trend of the new variants, but they got into some legal trouble with some like policy or some service that they offer to businesses to help them like evade taxes, I guess, is the accusation, allegedly, right? So, apparently this was built off of the basis of like a tax loophole or some like vague tax law that wasn't like properly written. So, it's kind of in a legal gray area, but obviously, when you're dealing with the government and taxes and stuff like that, they're going to get to the bottom of it, right? So, yeah, they're going to like sue you, and you're going to have a bad time if you get into trouble with the IRS or whatever tax agency is in the country, right? So anyways, yeah, it has fallen to around April 2021 levels. And of course, this is also kind of a recovery stock because American Express, in case you don't know, they're kind of like Visa and MasterCard, except they issue the cards themselves, and they're a payment processor, right? So they're going to suffer in case consumer spending goes down. So in the case where, the lockdown happens again, let's say, because of this new variant, and if the global economy slows down in general, consumer spending is going to drop, and that's going to be bad news for Visa, MasterCard, and of course American Express. So that's why it has fallen so much recently. But I do think that American Express is overall a very good company. They offer like one of the best services. So I have both Visa, MasterCard, and I also have American Express cards. And I can tell you, every time I call American Express, they pick up right away, right? So their customer service, I gotta say, is much, much better than Visa or MasterCard, at least in my experience. Because Visa and MasterCard, they don't offer their own sort of client like customer service, right? So when I call, let's say like the Visa card, I'm actually calling my bank, who's the issuer of the Visa card, and it's up to them to provide the customer service, right? Versus American Express, they're kind of more vertically integrated where they own the entire chain. So I'm actually calling up American Express if I have a problem with the American Express card itself, right? And although I have the platinum card, which is kind of like a premium card, before I had the platinum card, I also had just the regular like American Express Cobalt, which is like an exclusive Canadian kind of American Express card. Yeah, even when I had the Cobalt, which is not really a premium card, they pick up the phone right away. So it's not like I've only called the premium services or whatever, right? So anyways, yeah, I really do enjoy American Express products because their cards offer higher reward rates than everyone else, although their acceptance rate is also lower, so it's kind of a catch-22. But I really do like American Express. I think they're offering a really good product with really good customer service. So that's always a stock that I've always wanted to pick up, but I've just never really had the spare cash to kind of toss around for American Express stock because I prefer to invest and things that have like higher growth, like Tesla, Bitcoin, things like that. But if I ever have like spare cash lying around and I've already like over deployed, or like if I'm too heavy on like Tesla or Bitcoin or something, then I think adding American Express stock could use, or it could serve as a diversification tool for my portfolio. But right now, I'm not like that into it right now because I'm still building positions in other stocks. But this is definitely something that I'm watching very closely on my watch list. So yeah, anyways, that's AXP, and they also pay a dividend too. So next one, we have Disney, ticker symbol DIS. So Disney has always been a stock that has interested me a lot, and I used to have some Disney stock actually, and I bought it around like 90 or 100, and then I sold when it got to like 130. So I made a decent amount of profit there, but right now it's still actually higher than where I sold it at, because this was a long time ago. And right now it's at like a 52-week low, actually at around the 140s range. So obviously Disney is going to be a company that's negatively affected by the new variant because they run a bunch of theme parks, and I think they have Disney cruises, right? So yeah, that stuff is gonna go if there's a new lockdown, if there's a new variant, especially if the variant is shown to be like vaccine resistant or whatnot, right? So yeah, that's obviously gonna be bad news for Disney if that ends up happening. Again, like, we're still doing research on this new variant, so if you're watching this in the future, you know how it turned out, but as of right now, it's all very uncertain, and I think this uncertainty is leading to a crash in Disney's stock price. However, what I have to say to that is that Disney doesn't just rely on its theme parks and cruises, right? Obviously, Disney has Disney Plus, which has been wildly popular, and is their like Netflix streaming competitor, right? And they also own a bunch of intellectual property like Marvel and things like that, which it's not going away anytime soon, right? So it's really hard to replace such great intellectual property, because no one else is allowed to make Marvel related stuff for commercial purposes, right? Other than like fan fiction, no one else can produce like Star Wars related stuff, right? So they own Star Wars like franchise too. So yeah, I think Disney just has such a big, like, vast wealth of intellectual property and copyrights and stuff like that, and it's a huge moat too. So it's very hard to replace that kind of nostalgia in people's minds, because most of people, at least people in like North America and like US and Canada, we grew up watching Disney stuff, right? So it's irreplaceable. So I would feel really comfortable investing in Disney. Again, I'm building other positions right now, but yeah, this was definitely a stock that I will be willing to buy if it stays around this price or it goes even lower. I think that this is a great stock. Anyways, next up, moving on, we have stock number 3, which is CCL, Carnival Cruise. And CCL is also at a 52-week low, and it was actually $30 back in the summer. So it's dropped quite a bit since then. So you got to be careful with this one, though, I got to say, because this company is obviously on the forefront of companies that are hit by like new strains of the virus, or just when the pandemic started in general back in like early 2020. This was one of the first companies to drop like dramatically, right? So I think it used to be like $50 a share before the pandemic started, and then it dropped to like, I think $8 a share was at its lowest point. So yeah, this is because their entire business had to basically shut down for most part of like 2020. And right now, just as the cruise lines are opening back up again, we get news of a new variant. So you're going to have a lot of people canceling, right? People who are booking cruises tend to be older people as well, right? So older people are more susceptible to the virus, right? So yeah, it's just all in all, it's just been a disaster a couple of years for anything in the travel related industry, especially cruise lines. Yeah, that's why I have to say that you got to be careful with this one, because they did take on a lot of high interest debt back in 2020 when the pandemic first hit, just to survive, right? Because their revenues literally went to zero because they weren't allowed to operate at all, right? So could you imagine a company that was making like millions and millions of dollars a year in revenue, and then all of a sudden their revenue went to zero, like legitimately zero, right? So yeah, this is a tough one, and I think that having like a couple of years of bad revenues, or having 1 year of zero revenues and having another year of bad revenues, is going to compound in the future, right? So I think that for me, I won't get back into CCL unless it dropped really low, right? Unless it dropped to maybe like around like $10 or around like the March lows again. But yeah, as of right now, it's good for a quick trade maybe if you're thinking that the new variant is not a big deal or it's going to go away. But in terms of long-term investing, I really have like genuine concerns about the cruise industry in general. So I wouldn't invest in CCL for the time being. And but this is definitely something that I would like to add to my watch list at least, just to see how it's doing, right? And the same things that I'm saying for CCL kind of applies to other cruise lines as well, like Norwegian and the other one, I forget what it's called, Royal Caribbean. There you go. Yeah. Anyway, so yeah, it applies to the other ones as well, and kind of a similar line for airlines. Right, so airlines are kind of in the same boat, right? So the only one that I would like kind of watch out for is Air Canada, AC, right? But it's not on the list, but I'm just gonna quickly mention them. I think that AC is it's a big airline. It's the biggest airline here in Canada, right? And I think that the government would want to bail them out if they actually were about to like run out of money, because it's kind of like representative of Canadian like culture and Canadian values and whatnot, because it's literally called Air Canada, right? So yeah, anyways, but like airlines I wouldn't really like be too keen on at the moment as well. I just want to kind of wait and see if this like new variant is actually that serious, or if it's just something that's going to blow over. So I really want to be certain before I jump into any of these like super travel related stocks, right? So yeah, anyways, moving on, we have Las Vegas Sands, LVS. So in case you don't know what Las Vegas Sands is, it's a chain of casinos, and they're pretty much all based in Asia at this point, in Macau, China, and yeah, they're super exposed to China. So you know the story by now. They're also trading at 52-week lows. And the reason why I think that Las Vegas Sands, because it's very similar to another one called Wynn Resorts, which if you guys watch Jeremy from Financial Education, he's really into Wynn Resorts. But I'm actually paying more attention to Las Vegas Sands because I think Asia right now is actually getting less and less affected by the virus compared to Europe and North America. And I think that if you just look at the statistics, places like China, Japan, South Korea, like they've done a lot better job of kind of containing the virus compared to Europe and North America, right? So case counts in Asia are actually very low. And even lower if you compare by capita, because Asian countries have much higher populations compared to other countries in like Europe or North America. But like per capita, it's like the new infection rate is very low, right? So yeah, I think in general, Asian countries have done really well, and they've like pretty much all reopened, right? Like if you watch videos from like China and whatnot, like everything is open and their economy is running again. So I think that having exposure to like the Asian economy is actually not a bad thing. Of course, like if you're dealing with China, you also gotta like think about the political implications, right? Because the Chinese government can be kind of unpredictable sometimes. So if the Chinese government says, "Oh, we're not going to renew your casino license in Macau," then like that would really suck, right? And I think that that's like a concern for Las Vegas Sands right now, because they have some gaming licenses that are set to expire soon. So it remains to be seen whether or not they'll be able to get those renewed. If they don't get those renewed, then it could be another whole ordeal and the stock is not going to perform well. But you're definitely taking on a little bit more risk with LVS compared to Wynn. But I think that I just think if you're going to take a bet on like the recovery sector anyways, why not take like a heavier bet, right? I think that Las Vegas Sands represents more upside than Wynn if you're right anyways, right? So if you're going to take a bet on like a sector, you might as well take like a slightly bigger bet. And I think that in Asia, it's a lot like, again, as I said, the virus is a lot more contained in Asia than it is anywhere else now, even though that's where it originated from. Anyways, so yeah, that's number 4. And lastly, we have this one is not really a recovery stock in the traditional sense of the word, but I'm going to include it anyways. So the 5th stock that I picked is actually Intel, INTC. So previously, I had made a video about Intel. Maybe it was like probably a year ago by now, or over a year ago, like last summer, not this past summer, but the summer before that. And previously, I was very bearish about Intel in that video. And to be honest, I'm still kind of bearish because companies like Apple, and we recently received a report from Tesla that Tesla is actually moving away from Intel chips in their infotainment system in Teslas as well. So yeah, I think Apple and Tesla are both moving away from using Intel chips, and Intel chips have just gotten like worse and worse reputations, like in anything, right? Like in the gaming industry too, throughout the past few years. So yeah, I do think that Intel does have quite a bit of headwinds ahead of them, and they're being outcompeted by competitors like AMD. However, it's gone to the point where the valuation is actually fairly attractive. So they're trading at a forward PE of around 14 right now, which it means that the market is totally disrespecting Intel. Like they're just they think that the company is gonna like go bankrupt or something, right? Like a tech company that is trading at 14. Like just look at what AMD is trading in terms of forward PE, right? So the market is totally giving like a lot of disrespect to Intel, and I just think that maybe like it's overdone, right? So I think that AMD, yes, AMD is the winner, right? AMD is doing a lot better than Intel, that's for sure, that's undeniable, right? But I think that in terms of valuation, don't forget that Intel also pays a dividend of almost 3%, right? So you're getting like a pretty good value, and I think that recently they also got a new CEO, I think Pat Gelsinger is his name. And he's like an engineering background, right? So I think one of the major mistakes of Intel in the past was that they had a CEO that was just your typical business major who didn't really understand like the process, who didn't understand like what they needed to do on how to lead a tech company, right? So then they fired him, and then they got Pat Gelsinger in, who is an engineer. So I think that having a tech person lead a tech company is very important, right? And I do see some moves that they're trying to make that are like kind of pushing them towards being more competitive in the future. And I think that they're in sort of like an early turnaround mode, and I'm not sure exactly if it will be successful. But at this valuation, I think that if they are successful, you're looking at like a steady incline in terms of prices. So yeah, I think that given this valuation, it could make sense to give them a chance and to just collect that dividend while you're on the way, even if the stock doesn't move, right? So I think that the chip shortage is also going to continue to be a thing throughout 2022. Chips, you can't manufacture chips that fast, and I think that the chip shortage is still going to persist throughout. At least a year from now. I think that probably by the end of 2022 or by early 2023, I think the chip shortage will be mostly handled by then, assuming no like worst case scenario of another global lockdown, for example, right? But I think that assuming that nothing really bad happens, I think the chip shortage is going to persist for at least another year, and I think that Intel is going to benefit from that. So anyways, those are my 5 stocks that I have picked as my recovery plays. And again, I don't own any of these stocks at the moment, but these are the 5 biggest ones that I'm watching on my watch list. And if they stay at its current valuation or even hopefully drop a little bit more, I definitely be willing to maybe pick up some shares in any of these companies, except for maybe CCL, as I said. But yeah, anyways, I'll leave the video here. Hope you enjoyed, and please give a like button if you enjoyed the video, and be sure to subscribe if you haven't already. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye!